So this is the 2017 DB tabular statement from the mock. It's straightforward enough. There's a couple of ones with VAT in it that might be a little bit challenging, but I don't think there's anything too new in this. So we'll just work through this. It's always the important thing is to lay it out. So just with your assets, they both have depreciation. So you remember to put in your accumulated depreciation, and then debtors have a bad debt provision. So you have to make room for that less bad debt provision. Make sure you're skipping a couple of lines after your assets before you total them. So is that there's a few more, there's space for more to go in. And then the same with the liabilities. So we'll just throw in our numbers to start off. So land and buildings 560 and then minus 28,000 for your accumulated depreciation. That'll give you the 532. 85,000 and minus 39,000. Stock is 60,400. Debtors is 64,600. That's provision of 5%. So that in effect is 95% of the debtors. Now, if I was having a guess, I'd say it's I don't know, 70,000 or something. It's not actually, but we'll just take the 64,600. We're going to divide that by 95 and multiply by 100, and that brings you back up to the full amount of the debtors. So it's 68,000. So the difference between the two of those is your provision for bad debt. So between the 68 and the 64,600, so it's minus 3,400 for your bad debt provision. So we'll just total them. And you get doesn't seem right. So just that I put that as 850 instead of 85. So 703. Your liabilities 54,000, 27,000, 4,000 for your expenses due. Your finance buy then 400,000 for your issued. Your authorized doesn't go in. 56,000 for your share premium and 162 for your profit and loss. And again, I'll skip a couple of lines and total them. And if I've done it right, the total for the liabilities will equal the total for the assets. So that's those done. So now you don't have to look at the balance sheet anymore. It's complete irrelevance to you. You're just looking through each of the workings. You can rule out the months if you want. January to December, you can put in a second December column as well. And don't forget then you always have to total it. Or you can just do it month by month, it doesn't matter. So January, Fallon decided to revalue the land and buildings to 740. The land element was 90,000. Now the land being 90,000 is to do with the depreciation working for December. So just highlight that. So we have to get from 560 up to 740. So you have to add on a further 180. That brings you to the 740. Your depreciation of minus 28, we know that has to go to 0. And then we know then when we revalue, we've got a revaluation reserve in our finance buy. So that needs to go into your liabilities. And your revaluation reserve is always your depreciation. Your depreciation charge for the year, in this case there is none because it's on January the 1st, and then your increase, so it's the 180 and the 28, which is 208,000. And obviously if you total them, they should both be the same. Sorry. So that's January. You'll have that pretty much in every question. Same as the second one here, the purchase of the business. So he bought a business which included buildings of 210. So buildings go up by 210. He bought delivery vans, 45. Debtors of 12. So they're going up by that. Creditors are going up by 9. So the value of that business is 210 plus 45 plus 12 minus 9. So that's 258. And And then how much did he pay for the business? Well, he paid 240 in shares, and he gave a premium on the shares of 25 cent per share. So we take the 240 and we multiply that by 25%. So he's paid 300,000 in effect then for that business. So if the business was worth 200 and what did I say, 25 something, maybe 258 was it? Yeah, 258, and he paid 300,000 for it. Well, then there has to be a goodwill on the business. So just like in incomplete records, whatever, you've got your goodwill, which is the difference between what they've paid. So that has 42,000. Another way to do that is just add up the liabilities, like we always do, and they're 309. And if we add up the assets, and that's 267. If you take them away from each other, your 42,000 then brings you up to the 309. Great, so that's February done. March, management decided the provision for bad debts should be reduced to 4% of debtors. So we know that a decrease in bad debt provision is a profit. So this has to go up. This profit and loss has to go up. And then we're going to have to change this 3,400. And our answer has to be less than 3,400 because it's a decrease. So we look to our debtors. Debtors are 68 plus 12, so that's 80,000. And we're going to have a new bad debt provision of 4% of debtors, so 4% of 80,000. Just do it down here. So 4% of 80,000 is 3,200. So that's what our total bad debt provision has to be. So if at the moment it's 3,400 and we need to get it, or it's to 3,200, it's minus 3,400. So to get it to minus 3,200, we're going to have to add on 200 euros there. And of course, that'll make sense because an increase or decrease in bad debt provision is profit. So your profit will have to go up by 200. And that's all we do with that. That's March done. April, delivery van which cost 24 was traded in against a new van costing 45, and allowances made for the old van. Depreciation of the old van was 13.5. It's like your depreciation question one here. We know anytime we sell an asset, we'll have a profit and loss in the sale of the asset. But anyway, the delivery van had cost 24,000 and it was traded in against a new van costing 45. So it's going to be minus 24,000 plus 45,000. So take away the one you don't have, add on the one that you've bought. So delivery vans are going to go up by 21,000 once that transaction has taken place. Depreciation to date on the old van was 13.5. So if you don't have the van, you don't have its depreciation. Now remember, depreciation is a minus here. So to get rid of that minus, you have to add it back on. So that 13.5 gets added on there. And that brings you up to 34.5. So what else has happened? There's an allowance of 12,000 for the old van. So you got given 12,000 for the van, which means you still have to write a check for the difference between 12,000 and 45. So you have to write a check for 33,000. So your bank overdraft is going up by 33,000. So that's it. Well, there's a couple of ways then you can work out the profit or loss. The van cost 24,000. The depreciation on it was 13.5, which means it was worth 10,500. 24,000 minus 13.5 being the 10,500. If you got 12,000 for it, well, then you got 1,500 more than it was worth. So that'll balance it out. And that should balance 34.5 and 34.5. What you could have done there is just added this up to be 34.5, then take away this 33,000, and that will give you the 1,500 either. It's the same process. Okay, May. Now this one ties in with the December one as well. So we just always make a note that we have to come back and finish this off. Or you can do it at the same time if you've got it ruled out, depending on how you want to do it. So it says you received a bank statement showing a direct debit of 4.8 to cover insurance for the year. So we're paying insurance for the year. We'll put that in. We know if we've paid insurance for the year in May, that up until the 30th of April, that there's going to be insurance prepaid. And insurance prepaid is an asset. So now the only thing with it is there was expenses due in this. So when there is expenses due, you don't need to put in insurance prepaid separately. We can tie it in that the expense is no longer due anymore. So for the May one, we're going to put it in the expenses due column. So we're going to put that 4,800 into the expenses due as a minus because the expense is no longer due. All right, so we'll put it in there like so. Now, in effect, that will become minus 800. So it goes from being an expense due to being an expense prepaid, which is okay. Okay, we can, that's going to be all right because we'll see at the end of the year there will be an expense due. The second thing is you've paid that, so your bank overdraft has gone up by 4,800 as well. So that's how that balances out. Okay, the second part then, you've a credit transfer received at 7/7 to cover 11 months rent receivable. So rent receivable prepaid is also a liability. You owe the money back. So you're going to have a prepaid at the end of the year, so we put it all in as prepaid now. So the rent receivable prepaid is 7,700. Okay, and the bank then, your bank overdraft will go down by 7,700. Sorry. So in total, that will be minus 2,900 on that. You can show them separately if you want. So overall with that should balance to zero. There's nothing in the assets. Okay, so just the thing to note there in that expenses, if there's expenses due and you're paying an expense, well, the expense is no longer due anymore, so it goes into the expenses due. If there was an expenses due there, it would go into your assets as an expense prepaid, and it will be a plus up here. Okay, so just be aware of that. We'll probably see that in some of the other questions. Anyway, we're going to come back to May in the 2nd December column when we get to it. July then. You see this in your question once again. It should be straightforward enough for you. A payment of 900 was received from a debtor. So let's just deal with the payment first. The payment reduces your bank overdraft. Now, his debt has been written off and now wishes to trade with us again. This represents 60% of the original debt. Now, we know when that's a bad debt recovered, and a bad debt recovered is a profit. So the full bad debt recovered, the full amount, the 100% is bad debt recovered. So we take that 900, if that represents 60% of the original debt, we'll divide it by 60 and we'll multiply it by 100. That'll give you 1,500 as the full amount of the bad debt recovered. So what happens to debtors? Debtors goes back up by 600 euros. He is going to pay us the 600 euros again. So the debtor owes us 600 euros now. The bank overdraft goes down by 900 and that gives you the 1,500. So that's that part dealt with. There's another line to this. So again, you could put this in as the 2nd July one if you want. I wouldn't bother. But you'll see it in the American scheme, they probably do. The second part of it is on the same day, goods to the value of 960 were sold on credit delay. So there's another 960 that needs to go in here. So we add that 960 to the 600. and that gives you 1560. Again, if you wanted to, you could show that as a separate working for July. Stock then, what happens to your stock? If you've sold them stock, well, you don't have the stock anymore, so your stock levels need to go down. The stock goes down at cost price. So we know that when we change stock, it's always at the lower of cost or value. So in this case, it's cost. The value is 960. The cost is 960 divided by 120 multiplied by 100. So we take the 960 and to find its cost price, work backwards, divide by 120 and multiply by 100. And that's 800. So we took the stock for 800, we sold it for 960, which means we made a profit of another 160 on that. Okay, so the 1500, we have to add on another 160, so that's 1660. So basically, when you sell goods, there's no VAT involved or anything like that. So when you sell goods, debtors goes up by the selling price, stock goes down by the cost price, and your profit, because it's sales, will go up by the selling price. So if that was in a question one, it would be, you obviously wouldn't be changing stock, but you would change debtors and sales. So that's that. That should balance again. That's 760. August. Goods sold, previously sold for 600 were returned. The selling price of these was cost plus 20%. A credit note was issued showing a deduction of 10% of the selling price as a restocking charge. So again, think about what's happening, what's going to happen with sales returns. You're going to affect stock because stock will come back into your business. You'll affect debtors because debtors won't owe us the money anymore. And it's going to reduce your profit. So sales returns always reduce your profit. So they're the three we're going to adjust. So we'll deal with the stock first. Stock is going up because the stock is coming back into our business. So it goes up by its cost price. So it was sold for 600, irrelevant to us in relation to stock. The selling price of the goods was cost plus 20%. So we're going to take that 600, we'll divide it by 120 and multiply by 100. And that gives you a stock price of 500. What's happening to debtors? Debtors would go down by the selling price of 600, but there's a restocking charge, so he's not giving him the full credit note of 600. He's taking away 10%, so it's 600 and it's 90% of that, which should be 540. Okay, so debtors will go down by 540, which means instead of making a loss of 600, he's only made a loss of 40 euros on that sale and return. Okay, so he's given 540 back off the stock that was that it cost 500 to us. September next. Sorry, a creditor who was owed 8,000 by Fallon accepted a delivery van with a book value of 9.5. So easy enough straight away. Creditors goes down by 8,000. Doesn't owe us the money anymore. We're making a, well, we'll see what's going to happen. We're giving him something that was worth 9.5 for a debt of 8,000. So we're doing worse off. We're giving him a discount. We're making a loss on the sale of the asset of 1,500. So that should be straightforward to see. If we're giving him something worth 9.5 to clear a debt of 8,000, that's not good for us. So then we just have to look at what it is. It's not cash, it's a delivery van. So delivery van, it cost 13,000, so delivery vans go down by 13,000. If its value was 9.5, that meant there was depreciation of 3,500 on it. The creditor should have gone down by 8,000. So that'll give us 9,500 there and 9,500 at the bottom. And that's all we have to do. Right, October. A dividend of 5 cents per share was paid in all shares. So all shares is all issued shares. So we have to look and see how many shares we issued. So we issued 400,000 at the start of the year, and then we issued a further 240,000 when we bought the new business. The share premiums are irrelevant. So we've issued 640,000 shares. So if we're paying a dividend, dividend will increase our bank overdraft. So we're going to pay a dividend of 5% of 640,000, which will be 32,000. Okay, so our bank overdraft goes up by 32,000. And then we know dividends paid go into your profit and loss, and they reduce your profit and loss. So in our company accounts or published accounts or anything like that, when we've dividends paid, profit goes down. So that becomes a minus 32,000. So 0 at the top, 0 at the bottom. November, some people get a little bit confused with this. This is quite straightforward. We received 75,000 from the issue of the remaining shares. So we have to know how many more shares we have if it's the remaining shares. So we have issued 640,000. We're allowed to issue 700,000. So we have an extra at par. We have an extra 60,000 shares left to sell. So our shares cannot go above 700,000. So in November, our shares can only go up by that 60,000 euros. If we got 75,000 for them, that means there was a share premium of 15,000 on them. That brings you up to the 75. So 60,000 brings us up to the 700,000 here. And then anything above the 60,000 we got as a share premium. Our bank overdraft goes down by 75,000 because we received the money. And again, that's going to balance at 0 and 0. And that just brings us to December, which will be 2 December workings, our depreciations, and our finishing off our May working. So the depreciations first. The depreciation charge on buildings for the year is 2% of book value. The depreciation charge is calculated from date of valuation and date of purchase. So we go all the way back to our January working, and we revalued the land and buildings to 740. So it's going to be 2% of 740, but there's land of 90,000, so we have to take that away. So in effect, it's 2% of 650, which is 13,000. Okay, so just remember to take away that land, and it's on the 1st of the 1st, so it's for a full year. Then in February, on the 1st of February, you bought another building costing 210. So it's 2% of 210, but this time you only have it for 11 months because you bought them on the 1st of February. So that's 4,200. So your depreciation is 16,200. Now, tell me I have that wrong. So sorry. Two percent of 210. Oh yeah, I never multiplied by 1112, sorry. So that's 3850. Okay, so in total that's 16,850. And of course that'll go in your buildings in December. Because it's a depreciation, it's a minus. So 16,850. Second one, depreciation, total depreciation on delivery vans is 22,000. So we don't have to do anything on that. So in total then, that is, what's that, 38,850. So profit and loss, 38,850. And of course, depreciations are an expense, so they reduce your profit. So that'll balance out at minus 38,850 for our assets and our liabilities. Our second December working is to do with our expenses due and our rent prepaid. So if we go back up to May, we received a bank statement showing a direct debit of 4,800 to cover rent for the year ended 30th of the 4th, 2017. So our rent, which we put in our expenses due, was to cover rent up until the 30th of the 4th. So in effect, 4,800 is up for 4 months of next year. Now, however, of the 4,800, 4,000 of it is for this year or for last year, because there was an expense due at the start of the year. So in effect, we've only paid €800, and that 4,800 brings us all the way up until the 30th of the 4th. So that 4,800 should be, there should in effect be a rent prepaid at the start of the year. So it is 4,800 is €400 a month. So if we're paying €400 a month, we have only really paid 2 months of this. We've paid July and August, or sorry, we've paid May and June, because 4,000 of the 4,800 is to do with last year. So we've paid May and June. So that still leaves us with, we've paid May and June. That still leaves us with July, August, September, October, November, and December. Okay, so we've a good chunk still to go. So of that 4,800, how much of it is to do with this year? It's 4 months are into next year, so it's four. That'd be for 1,600 will have to be our total at the end of all of this. So into our total we'll put 1,600. So there's going to be a due of 1,600 at the end of this, because we still have December, November, October, and September to go. Okay, so 4,000 minus 4,800 gives you minus 800. So how do we get from minus 800 up to 1,600? Well, there must have been 2,400 here for the year. Okay, so we're transferring 2,400 for this year. I'll explain that again. Maybe when I see you face to face, it's a tricky enough sort of concept at times. So we need to get that to 1,600. So it's plus 2,400 there. The second part is easy enough. The credit transfer for the rent is 7,700, covering 11 months in advance from May the 1st. So they're paying us the rent for 11 months from May the 1st. That's May, June, July, August, September, October, November, December. So that's 9 months. So January, so that's 8 months. Is it May, June, July, August, September, October, November, December? That's 8 months. So 3 months are into next year. So 3/11ths of the rent of the 7,700 are into next year. So if 7,700 is 11 months, well then 700 a month. So 3/11ths will be 2,100 in the total. So at the end of the year, there's 2,100 prepaid. So how do we get from 5,700 to 2,100? Well, it's got to be a minus 5,600 there. Okay, and that brings it into the 2-1. Now, you make it all balance out with the profit and loss. So 2,400 is an expense. 5,600 is, in effect, it's a gain, I suppose, in reality. So the overall effect of that is the difference between the two of those. So how would I do that? 2,000. It has to balance off at 0. So 5,600 minus 2,400. So it'll be 3,200 in total. And that balances then at 0 and 0. Okay, I might do a few of those separately in a separate video because I know I'm never really very good at explaining them, so I'll put a bit of thought into it. Anyway, just to finish it off, you just have to total all of your columns. You never know what you're getting the totals for, so it's really important you total them all. So start at the 1st of January. Okay, and work your way all the way over to December. And hopefully this will balance at 1207070. So that's that done. It should be, if you get into a rhythm with these, they're quite quick. So I know obviously it's far easier for me. I don't have to use a calculator when I'm using a spreadsheet, and you lads do. But simple things to remember is that the top always has to equal the bottom, and that you know what you're doing with all of these workings. You've seen them all before. Okay, so that's that one done. I'll get a few more done over the weekend.